यूक्रेन रशिया वॉर इज एट इट्स पीक एंड एवरीबडी इज क्वाइट पर्टर्ब्ड कि स्टॉक मार्केट का क्या होगा, मार्केट्स क्रैश हो रहे हैं. द ऑब्जेक्टिव ऑफ टुडेज वीडियो इज टू ascertain वेयर द मार्केट्स विल बी गोइंग and how the things will unravel and what is the status of Indian markets. So मैं broader Nifty को लेके चलूंगा और मैं आपको Nifty को लेके बताऊंगा कि how the markets have been performing and what you can interpret out of this market as far as it goes. So without wasting much of the time, I am here taking you through the needful. Now here if you will see there's a nearly two graphs. One is blue and one is orange. जो ब्लू ग्राफ है वो आपको दिखाता है कि हमारा पीई क्या है, प्राइस टू अर्निंग रेशियो, और जो ऑरेंज वाला आपको जो दिख रहा है दैट इज द निफ्टी. So now Nifty, we know that it has hit as high as around 16,000. It's around 16,400 or something. Yeah. 498, and it was at the all-time high of around 18,419. Now the question arises कि nearly ये यहाँ से 10-12% आपका down आ चुका है Nifty. So what does it relate to? Now the matter of fact is when the Nifty was at around all-time high of around 18,419, at that time price to earning ratio was 42. What does it mean? It means if you want to invest in Nifty, you would be investing 42 rupees for 1 rupee of the earning. Now the same has come down to around 21.21. So this means for every 1 rupee of the earning out of the Nifty, you will be now be paying around 21.21. So it is half. So for every money that you would invest or rebalance your portfolio, you will be having double the value. That is the catch it is. Now the second part is the bands. If you see the different bands here, the red band shows that it is highly overvalued. That means it's too expensive and therefore not to be invested into, being away from the market. And since it is the basic minimum, you can say the median range, and over the longer or the best period of the time it is lying over here. Now if I would tell you, if you see this as a section, this is when the COVID crisis had happened in the month of March 2020. So if you see here 17.15, it was at 17.15 the value. The mark, it was initially, before that it was around 28, it fell from 28 to 17, and from 17 when the markets opened and everything, it spiked like anything. So matter of fact is, if those people who have not invested can invest at this price range, because it is where you will be actually getting very good value stocks. Asian Paints and many others have corrected by over 25%. So it is a time where you can have the very good companies invested into and build over it. So having said that, it is also a time you have around 20 days where you can make the tax loss harvesting. So whatever the profits had been in other scripts, you can exit and net it off against the notional losses. The matter of fact is, because much of the very good companies which were overvalued, were too pricey, have now come down. They have now come down. So it is a very right time to rebalance the portfolio if you have the existing portfolio. Now coming down to the next part, if you see, it is a price to book ratio. We'll be skipping that up as of now. Let's come on to the dividend yield. So in my last video, I had told that it's the right time to start building a dividend portfolio because the companies are at the lower market price. So therefore, dividend yield will be much higher. So if we see, all these red are showing that dividend yields are not quite favorable, and the darker the color, the more disadvantaged the position is. But if we see over the last 3 months, if we see here, it is now 1.28. Prior to it was 1.16. That means dividend yield of around 1.16% was in the month of Jan, which now in the month of March is around 1.28. So अगर हम dividend yield का ग्राफ देखते हैं, you will be seeing that dividend yield had hit the all-time low, and from here it had gone up and reached the bear medium. So this is what it is. So the matter of fact is, this is the right time when the dividend yield is actually increasing. It's the right time to build the dividend portfolio for those who want to have a dividend return on their portfolios. So this is how it is. So now the question arises, like many of the people keep on asking me, what should be the thing we should be doing? So first and foremost, if you have not invested or for a quite a long time, or you think you have missed the bus, this is the right time you can enter into. Obviously your horizon should be around 3 to 5 years, but since the price to earning ratio is very very attractive, and once the market rebounds, it will spike up like anything, and it will not give you a chance to wait and take a breath and then invest into, because it will spike like anything. The second thing is that if you are already invested into the portfolio, you can rebalance your portfolio, you can weed out the weaklings from your stocks, and even the good stocks that have hit a very all-time high, you can rebalance and recalibrate your portfolio. Use the tax loss harvesting. That means you can net off profit against the losses so that the tax outgo is not there, but at the same time you can rebalance and optimize your portfolio, which eventually will give you very handsome returns. Just because the price to earning ratio is at 21 levels, that means the stocks are not that pricey into the market, so they are at the very good valuations present in the market. However, whatever the investment you do should have the longer horizon, and you should take into consideration all the risk aspects associated and the asset allocation to which you belong to. And this is how it is. And like the Warren Buffett had said in 2014, in the time of war, the money loses its value, because the most valuable thing would be the stocks which would have corrected. So you will be getting much valuable stocks to take positions into. So if you have funds to park, so this is the right time you can park the funds and then build or structure or stabilize your portfolio. Thank you so much. Have a great evening and happy investing. Thank you.